All right, everyone. We're going to look at UEC today. This is a uranium mining company. And it kind of goes along with the whole narrative, the AI narrative, which I'm sure some of you are tired of by now, but the whole AI narrative of data centers needing the power, nuclear power kind of making a resurgence. I do think macro-wise, long term, there will be an embracement of nuclear energy. I just don't know for how long or how long it's going to take for that to happen. So it's all about kind of like your timeline and what you're looking for. I'm going to start by looking at the valuation rather than their latest earnings because some of these companies, um, it really is more about the valuation and then pending catalysts more so than historical performance. And this company, I think, fits into that category. So you can see the shares outstanding is under 500 million, which is, I think, that's okay. That's good. That's not terrible. The lower this number is, the better. But I think on average, it's, around 500 million. That's kind of a good area to have it. Market cap is 7 billion, which if we go look at the financials here real quick, this is definitely pricing in future growth, future macro, because 7 billion for, a net profit of negative 87 million is obviously, the pricing in future growth. So that's something to keep in mind. And you can see right here, there's, they have some wild swings here based on kind of what demand is. I'm just going to ask, does UEC produce, how about this? Does UEC change their production timeline based on uranium demand? Do they have a active uranium mine? I don't know any of this, so let's just see. Scale production, yep, okay. Active uranium production, ramp up phase, not full scale, steady output. Okay. Unhedged model, don't lock in long-term price contracts. Okay. Don't run at max capacity all the time, which that's what you can see here. You can see, revenue crazy, 164 million to basically nothing to 66 million, lots of kind of, changes. Restarted in August 2024. 130 pounds. Still adding new well flows and infrastructure to increase output. So it's nice that they're like already in production. They have a Wyoming mine. Looks like they have a Texas hub, which is near production ready. So that could be a catalyst. This could be a catalyst right here. Multiple projects that can be turned on later. Let's ask this. When is Burke Hollow expected to be production ready? And what is the net present value of the mine? I bet that's a catalyst. Late 2025, project was 90% complete. Okay. Construction completion by November 2025. Okay. They've missed that. So this construction, oh no, it's complete. It's ready. Waiting on regulatory approval. Okay. So that's great. Flip the switch. There's no net present value. So that could be a catalyst. So that's going to be their, I view that as a catalyst, is this Texas mine. when they do the valuation, when it gets the permit or whatever it needs from the government. And that's going to be a big catalyst. Multiple predictor projects can be turned on later. So this is Christensen Ranch is producing, but still ramping up. I kind of want to see what this looks like. Christensen Ranch uranium. Look at that thing. Nothing glamorous, but yeah, look at that. It's always wild to see this, they're mining uranium here. Huh. Okay. So that's interesting. Let's see net profit right here. I want to see what their, here is their latest earnings. Which this is important, this total cost per pound. But this is looking a little incomplete. I want to see. I want to see 10Q. And look at this. So they have about $500 million cash, which is great. And they have no debt, which is also great. Gross margin of 50%. Pretty big. There's some pretty large operating costs here. So that's why they need to keep ramping up production to overcome this. But the cash burn of 23 million means they have a pretty large cash runway. Looks like they got their operating activities here. But the main thing that I'm looking for is just this cash burn. Which we can also look at the statement of cash flows to get that. Which I want, though they got a lot of, man, to be an accountant here. Yeah, they got all kinds of reports. I just want the statement of cash flows. But I'm not gonna dig super crazy to find it. I'll just go ahead and look at their net profit here for the year is 87 million. So when we were looking at the net loss of about 20 million for the quarter, this checks out. So that means that they have a cash runway of a couple of years. Let's look at the cash flow. Okay, operating cash flow for the year is negative 64 million, so a little bit better. So you're looking at a cash runway of 3 to 4 years, which it sounds like they're going to have their uranium mine in Texas going here pretty soon, and they're going to be they're wrapping up production elsewhere. So that's interesting. I want to see. UBC has a market cap of 7 billion. What kind of ramp up would they need to justify that? And what are the coming catalysts? Yeah, we knew that. So we were looking at this earlier. The margin was about 50%, which is really good. So if uranium stays high, which I think it will, and I think uranium will actually probably keep going up, you're going to need 500 million to 700 million cash flow. They have 12 million after the Sweetwater acquisition. So look at that. They're already over that. A multi-million pound US producer, mid-tier better. Right now they're producing 1 million, but they need to be producing about 6 to 10 million. So it's all about execution then. They already have the pieces in place. It's just executing it. Burke Hollow startup, which we just looked at, that was Texas. The Wyoming ramp. And then uranium conversion. And then the uranium price itself, which I think will keep going up. Interesting. So on this one, this is a very interesting play because it's all about execution. Because they have these new uranium mines, they need to produce 12 million ounces or pounds to justify the valuation that they have, and it sounds like they're having a Sweetwater acquisition that will allow them to do that. I guess I should ask: will the Sweetwater acquisition be done with cash or stock? Okay, not directly USC buying Sweetwater. USC is participating as a strategic investor. Okay, not all cash. 330 million. Is not the acquirer, but is involved. Agreed to invest 40 million in the deal via financing subscription. Okay. Look at that. So then they have a deal where they're avoiding the dilution by, they're going to have to pay royalties, but they're kind of, partnering with the royalty company that's owning it, and they're just the producer. This still does not directly increase UC production, but it's where the platform narrative you're going to play build out. So how could UEC get to 12 million pounds of uranium produced? They need that to justify rent valuation. Okay. Christensen Ranch, which they already have. The Texas Hub, which we just looked at. The Sweetwater acquisition is the swing factor. So it might add this. Okay, so they got 3 things that got to happen. This Texas Hub, which we looked at, they already have it built and ready to go. They just need to get approval. They'll probably get it, let's be honest. The Wyoming Hub, which they just need to ramp up production, some more drilling, whatnot. And then this Sweetwater acquisition is kind of the trigger. So by 2030, it could get that 12 million pounds. So this to me seems like a play that you're going to be in it for a few years. They got plenty of cash for those few years. And it's really all about uranium. They need to execute well in those 3 mines, but then also uranium prices need to keep going up, which I think they will. I think they will, and I think that nuclear demand will keep going up. So this to me seems like it would be like a longer term bet if you were to get into it. I don't see a lot of red flags. The valuation is high, but it's possible to get to that valuation and maybe even higher, assuming that the demand for uranium keeps going up. Because if that keeps going up, their gross margin just goes from 50, 60% to maybe 80%. If the price of uranium just starts skyrocketing, which I think it will. So definitely a longer term play, I think, but maybe not. Maybe the catalyst with the Texas mine goes through. They get their approval. Maybe the Sweetwater acquisition gets them something where they maybe can add a few more pounds. And so there's a few interesting things on this. I think this is an interesting stock, interesting play in an interesting sector. So it's fun to look at. I don't really know too much about this stock. So if there's anything I'm missing or not thinking about, please let me know or comment. I'm in this for the fun of the game, to learn about these companies and kind of what they're doing. I think it's really interesting. So yeah, let me know what I'm missing or not thinking about, and I will see you guys in the next one.